Milo is a barely 3-year-old mortgage lender that has worked so far mainly with international clients, closing over $100 million in loans in the last 15 months. Now it's getting into crypto loans. CEO Joseph Rupena joins us to explain. Thanks so much for being here. In the simplest terms, how exactly does a crypto mortgage work?
Absolutely. It's a pleasure to be here on the show this morning. So a crypto mortgage is really an opportunity for individuals that have crypto to purchase real estate. And we do that by getting comfortable with them as borrowers, as well as the fact that crypto is a fantastic long-term asset to hold.
So do you actually lend them Bitcoin and Ethereum to buy a house, or is it based on the underwriting?
Great question. So this is for individuals that already own crypto. So they own Bitcoin, Ethereum, or stablecoin. And this allows us to underwrite that as well as them as a borrower to be able to extend credit to them and be able to purchase real estate in the U.S.
But you're actually lending them dollars, not necessarily the Bitcoin and Ethereum, correct?
That's correct. That's correct. So we're providing a mortgage, so dollars. So similar to a transaction today that happens where there's a seller that would like dollars once they sell their property. We do the same thing. We facilitate that by extending dollars to the seller. And then we provide a mortgage to the borrower, in this case, the individual that has crypto.
But they could actually make their monthly payments in crypto if they want, correct?
That's correct. So they can pay in crypto, or they can actually make payments in dollars, whichever they choose.
Okay, so let's get into the underwriting of this. When you generally underwrite a borrower, you're looking at what their assets are, what their money in the bank is, basically, and that's pretty settled. I mean, when you have an amount of dollars, you have an amount of dollars. But being as volatile as crypto is, if you're underwriting a borrower based on the amount of crypto they have and considering that mostly their wealth, then isn't that volatility a huge risk to you?
I think that's one of the magics of what we're doing by combining a very stable asset like real estate along with crypto that allows us to get comfortable with the overall transaction of giving them a mortgage with the consideration that they have crypto as well, that is a liquid asset, as well as having real estate all tied up into one transaction. So that actually smooths down the volatility for us.
So why exactly do we need crypto mortgages?
So there's some really interesting information, and it's really not so much where the world has been, but where the world is actually going. If you think about this past year, about 1 out of every 8 consumers actually liquidated some crypto to go out and qualify for a mortgage. And we fundamentally believe that this asset class that right now is roughly about $2 trillion will continue to grow over time. And those individuals that want to transact and purchase real estate are going to need solutions like ours and really for us to be able to pioneer and really be the first company to go out and launch this product and have it live is a very, very big deal for lots and lots of consumers that have crypto that have been needing a solution like this for a very long time.